What's up, guys? My name is Connor King with Resolute Capital. So, Dave Ramsey. He's one of the most well-known experts in personal and small business finance, and one of the questions he gets asked most frequently is, Dave, what should I be investing my money in? And every single time he answers saying that you should invest your money into mutual funds across 4 types: growth, growth and income, aggressive growth, and international. He says to invest 25% evenly across these 4 funds, and if you do, you'll be on average returning 12% annually. In this video, we're going to take a deeper dive into what Dave is talking about and try to pinpoint exactly which mutual funds he's referring to. Let's get into it. This video is for entertainment purposes only, and you should always consult with a professional financial advisor before making any decisions with your money. To begin with, let's take a look at a clip from YouTube of Dave talking about his personal investments from January 2018.
I own one mutual fund that started in 1973 and has an average annual return since 1973 of 13.43%. Out of that 44 years, 7 of those years, it was down. 37 of those years, it was up. I own another mutual fund that started in 1934 that has an average annual return since 1934, 83 years. The average annual return is 12.07%. And out of that 83 years, 15 years have been down. 68 years were up. That's a pretty stable investment.
First, most people think the mutual funds that Dave is talking about are those of American Funds. American Funds has been around since 1931, and they have a long track record of above average performance. Specifically, the first fund he mentioned is more than likely the Growth Fund of America, and the ticker symbol is AGTHX. This fund started in 1973, and on average it has returned 13.13% annually. More than likely, the second fund that Dave mentions is the Investment Company of America, ticker symbol ICA. This fund started in 1934 and has achieved an average annual return of 12.01%. So just like Dave is saying in the video, he actually has achieved these high returns and has beaten the S&P 500 since he's been investing. The big question you have to be asking is whether or not these investments can keep up their amazing return in the future. It's one thing that they've done it for a long time in the past, but what we really care about is their future performance. And as with any stock market investment, their future is very uncertain. So Dave gets a lot of scrutiny from the investment community because he's always saying that you can constantly achieve a 12% return. And a lot of people say that this is way too high and that he's an idiot for thinking that. But the reason why he does believe that is because for 40 plus years, he has achieved that return. And so he's just expressing to people what he's done because it's really worked for him. I personally wouldn't want to invest all my funds into this philosophy. I would also want to have some invested into the S&P 500. That way I can have more diversity. If you want to invest using Dave's philosophy, the easiest way to go about it is to go to Dave's website and get connected with a SmartVestor Pro. These are just financial planners that Dave recommends, and we'll link his website down below in the description. Thanks for watching this video. If you enjoyed it, please like it and subscribe to our channel, and let us know if you have any questions down below in the comments, and we'll get back to you. See you next time.